Good morning, Agritosh here.
Hey, Agritosh, it's Matt. Can you hear me?
Yes, I can hear you. Can you hear me?
Yep.
Great.
Well. All right. Let me move this over here. I think. Sorry, just trying to get things set up. So, can you take over the screen sharing at the moment, Agritosh?
Yeah, let me try. Okay. Yeah, can you see my screen?
Yes.
Okay.
All right.
I'm just trying to maximize this.
There you go.
So
that's correct.
You can see the agenda now.
Yep.
Okay, perfect. Yeah, all right. I'll stop share for now. Yeah.
Great.
Okay.
Thank you. Makupa, I see you here. Kondwani, morning, Faith. Which one of you will be presenting this morning?
Mkupa.
Okay. Makupa, do you want to share your screen? Or do you want me to run it from my side?
Yeah, your side is fine.
Okay. So let me just pull that up and make sure that we can see it fine. Let's see. Okay. Can you see it fine, Makupa?
Not yet.
Oh, right. Sorry. I know why. Great. How about now?
Yeah, it's popped up.
Perfect. All right. Great. And you should be able to see it moving forward now. I'm just.
Yeah, yes.
Okay. You can just let me know when you'd like it to move forward, and I'll do that from the background.
All right.
Great. And I will mute you, Makupa, until we get started. So, mute myself as well. Thank you all for joining this morning. We will wait about 8 minutes until we get started, maybe a few minutes longer just to allow some people with technical difficulties to join. Thank you all for joining this morning. We are going to use a meeting format rather than a webinar format, which will allow for more interaction, but it also means that there will be a few more maybe opportunities for people to unmute or unvideo, but we'll work through it. So great.
That documentations that was done in that were done in Chipangari district. So after that, they had to sit down and see what next for these people after doing the land documentations. And as we were entered in this partnership, we had some huge positive impact on the communities. As you can see by that is a farmer who's just along the Lundazi Chipata road. He has a garden who is doing fine and is making any from that. So we are delighted as and interested with this partnership as MFinance Finance. And then after that's when now we looked at the benefits with the community from this, because they had to appreciate the first point. You have to appreciate the previous works that were done to do with the customer land ownership documentation, because they need to value and understand why this project took place. Because without just doing that project and then leave them without adding value to the works, they won't see any sense of this kind of activities. Then through this partnership, at least people started appreciating the previous works that were done by various partners and their organizations. And then by that, they realized that they were able to have access to formal financial services. And these services, now with MFinance Finance, when we were operating from this place, and we are still operating in these areas, they realized that at least in terms of transaction costs, they realized that it's very low. And looking at the distances also, at least because time is a commodity, and with the distances that we are moving, it was a challenge to them. And because someone who has a small amount of money, moving a long distances to go and deposit into a bank, it's a challenge. They can't move because looking at the costs involved in transport. So with the coming of this project, I think the community benefited a lot on that aspect. And also the ability to build a financial and credit history through savings. On this part, most of financial institutions here in Zambia, I don't know in other regions, but usually people, when they seek financial assistance, especially in terms of loans, we ask about bank statements, any financial records that we can use when doing appraisals, in financial appraisals. So we discovered most of the population there, they are very behind. They don't have any they don't have any credit history. So with the introduction of this financial inclusion, the community benefited, because now if they need the financial services, if we are seeking for financial services in terms of loans, they're able to provide the information and to meet the KYC requirements. And because of also on that part, looking at the security, they have improved security of their funds. We heard a lot of stories whereby people have been attacked, killed on over small amounts of money. It could be maybe about 3,000. Someone has sold the inputs, what they worked for almost 6 months during the season. Once they sell, the people bought, then they connive, and then they attack them to retrieve the money. So all these stories, at least at the moment, they have reduced due to the financial products that we introduced regarding the saving products. So at least in terms of finances, it's more secure, in those areas. And also, as we are doing this project, we are to conduct various financial literacy trainings, especially on savings products, loans, and these benefits. And this has enhanced the community understanding more on financial, in terms of literacy regarding financials. And most of the chiefs, I think they welcomed and they appreciated this. And the community has also felt they even have that kind of confidence in the banking system. And also on the other part is the access to credit facility from MFinance, of which we are now violated, of which people now are able to access facilities from MFinance. At various facilities, it could be the cash loans, because now they understand what is involved in when someone wants to get when someone is seeking for financial assistance, or is to do with farming inputs, they understand everywhere through these trainings that we conducted in this Chipangari district. And also due to that, and also as we are able to link these farmers to suppliers and other value chain partnerships in business, because they are being connected, and the other suppliers also approached us MFinance because they were more interested, as we are dealing with farmers. Looking at the region where we are, Eastern Province, the major business here is farming. So those who are in new seed supplying companies, they are able to approach us to see how we can work together. So with this, the community had to benefit from this partnership and the project which we carried. And then looking at this, the implementations that we did, we can say that it was a success, and we can see chiefs welcome the project. There is Chief Munukwa in the middle, the other side on the left is Kondwan, and myself on the other side. Most of the chiefs were happy with the works and they welcomed, and we thought, and this, we said, wow, it's a plus, because we are thinking maybe it's like we are thinking at the beginning, certain chiefdoms, they were thinking that maybe when you come in as a financial institutions, you give loans, and then if people fail to pay, you end up confiscating their land. That's what they were thinking at first. But we said, no, we had to explain what is involved and how we are going to use the land documentation in terms of certificates, the villagers were given. We said that no, we'll use this for this purpose, not for collateral issues, no. So certain chiefs understood the whole project, and then they welcomed it very well. And also, more to that, the community members welcomed the project. And MFinance rolled out its mobile banking system in this Chipangari, which involved the chiefdom, about 3 chiefdoms, which is Munukwa, Mishava, Mkanda, and also part of Chinunda and the Chanja chiefdoms, because we find that maybe the demarcation is just the road. So you can't say no, because you are this side and you can't take part of this. No, we said no. We have to include those who are almost like neighbors. So we had to extend further. And also we expanded savings portfolio to the rural population, which provide our future credit market, as most are building their credit profiles. Yeah, looking at this, even the market share in terms of saving product at MFinance, it has expanded, and in those areas they are appreciating, because they were like left out. And you know, Chipangari is now like almost like a new district. So taking these services there, it's adding value to them, and realizing that we can also be part of the banking system in Zambia. So from this, it was a success, and we thought of like mentioning it in this meeting. And some farmers were linked to suppliers and markets, off-takers of groundnuts like Good Nature. It was the first time to enter into partnership. Because of this partnership, we had to when Good Nature came in, and then what can we do as MFinance? And through this partnership, we are able to give farming inputs to certain farmers in form of groundnut seed. And this happened, actually, it's not just in Chipata, we also did in Rundazi district. Yeah, but since it's about Chipangali, that's why I had to give that figure, which is about 60,000. But if you include Rundazi, you'll find that it's almost gone to 300 somewhere there. Because if you Rundazi, there are a number of them. And maths on financing are an easy way of dealing with clients with land certificates than those without a certificate, because this were able to quickly meet the KYC requirements in terms of onboarding of clients or client recruitment. And then on part of this, this is just a continuation where you see how the community welcomed the project. And when we plan, I know we're going to have the meetings, they are welcoming it very well. And most of the participants, I think I would say almost 60% were women. And from there, from the mobile platform, the savings platform that we introduced, we had the other partners like MTN, 543 Consequences, those are on our platforms, so that the services what we are offering to the communities that's of high quality, and then the access to funds is almost 24/7, so that they are not restricted only to be attended by MFinance agents, but they can also have access their funds through MTN 543 Consequences. Now, looking at the whole project, we are facing various challenges. The first one I'll look at is a poor infrastructure. In this case, look at roads. As you can see there is a bridge which this goes to Isinimuchifu Munukwa. This road connects Munukwa and Chinunda. It was washed away, and it was a challenge using this route, especially in rain season. But I think last week I was just remembering that I wish I had captured the one that they have put up now, because they have repaired that, and I think the works that they did of that of high standards of quality. I wish I had captured that to show it now, because I think this one has been worked on, and we had to promise the villagers, and we meet these people who are in charge of these places, and no, we are trying to take these services there, but the challenge is this. Others is in rain season, some roads were in bad state, you can't even reach out, so even the reach out was limited in terms of road infrastructure. Then the other part we discovered which was a challenge, is literacy levels. With this, we thought of like the platform like USSD, if we can use voice local language on the platform to give guidance to the mobile operator, especially like those who are accessing mobile transactions, it can help, because what is happening, most of them, they don't read English. They can dial our feature code, which is *318#, but now to proceed further is a challenge. So you discover to those who don't read, they will start asking stuff, seeking assistance from someone, and then on that in that aspect you compromise security in terms of the pins and all that. So this was a challenge. So it was very challenging, and if you want to leave out someone, will feel like no, they are not part of the project. But we had to educate them and to show them, at least to explain to them on the stages, and to try to write something for them so that they can follow when they want to access it, to access our services using the mobile phone. Then the other challenge we had is non-distribution of land certificates in some communities. These are certain areas, the certificates were not distributed. They are held, we are still with the chiefs, people in custody, with those who are supposed to distribute them. So this, we had a challenge at the beginning, but and we opted to start with areas where they are already distributed. But after that, we had to seek guidance, of which now they say, no, you can still waive off and see how you can bring everyone on board. And the other challenge which we had, certificate relocation. We find that they have a certificate documentation, but maybe someone is keeping it, maybe someone in Lusaka is an urban area. You ask them, why don't you have a second for safety reasons? They are keeping, maybe someone was shifted, has gone somewhere, they have gone with the certificates. So this was also challenging, but we, at the end of it, after we had to waive off in some areas, we had also to take advantage of that and implement what we planned in terms of the project that we are rolling out. Another challenge that we had is poor no mobile communication network in certain areas. In terms of Chipangai district, mobile network is not all that good. I think I'll say almost like 40% of Chipangai really need to have this network improved. And on the side of Mukanda, Mushava, because of the border, there are certain networks coming from our neighbor in Malawi who have just put towers there. And when you go there, you find that our mobile networks will just be on roaming. So it's a challenge in terms of network. That's what we faced in these areas. We had time to meet with MTN and the Airtel managers, but they said, no, plans are there for us to extend and to erect some towers there, but it's due to COVID issues. That's why there are some delays. And that's what they advise us. And because of that, we had also the COVID epidemic situation. And this is obvious because of the limitation in terms of meetings, the numbers to meet. And at some time, we were even in no meetings at all, not until they had to say, okay, it's a new normal, but you can gather not more than 50. So this slowed the reach out plan that we had. And also the other aspect that we faced in terms of the challenges is women independence on husbands. It was very difficult for women to make the decisions on their own. Usually they will seek guidance from their husbands. So in this, we had to explain especially to men, to understand the importance of the project and the essence of this project, because it's about women empowerment and they should not be left out. So at the beginning, it was a challenge, and towards the end, especially after some other partnerships that we had with Good Nature, they came to realize, and then that these people have come, they are really there to help us. And that's why we had put there the fears of scams, because we had heard various stories like certain financial institutions opening accounts there, people depositing money and then they disappear like that. So when we had to, when we were about to implement our project there to carry out our works, they said, no, this also is part of a scam. So they were so resistant at the beginning, and it was so difficult to make them understand and to believe in our works. But as months went on, at least they started opening up, and with the help of other partners, especially with the Good Nature groundnut seed distribution that we had, that's when they came to realize that, no, this is really swear. These are really there to help us. And that's when we saw the number of people like women coming on board, opening more, joining our banking platform, especially on saving products. And with this, at least we are happy, and we say, okay, now we can try by all means to cover up the gap in terms of meeting the targets. And it was also promising, because before this kind of other, but in terms of the balance distribution, in terms of the opening of savings, we had more men compared to women. But after that, the number of men was overtaken with the response that we received from women. And then in terms of marketing strategy, Chiefdom landed data, which with this we we are assisted with this data so that we know the density population in terms of people in the rural areas, and so that we have an idea which areas, and we can reach out quickly, and then bring at least everyone, try to bring everyone on board. At least they reach out with the data that we are given, really helped us. And we also doing marketing where we assigned the field staff members like myself, because I was almost on a weekly basis. I was just almost ever in the field, trying to put up my agents who are also helping us in the marketing, because what we do, there are certain companies who are trying to approach us if they can put up these agents in those areas, like just employing people who can be taken and start operating as agents in these areas where we're operating from. But we felt no, this it won't work, because people already have that idea of being scammed before. So we thought, no, this won't work properly. We are just going to employ people to recruit agents within the communities, so that because those they are well known, well trusted, and they will benefit, it will be beneficial to the community. So with these agents, I think in terms of organizing the meetings, it was so easy, and they helped us a lot in terms of marketing. Also with our partners like Good Nature, and also means of agriculture cooperatives and saving groups. It was so easy when we rolled out this program to meet with the Minister of Agriculture, like one in Chipangari, Mr. Mwansa. He welcomed the project and was very happy. As we were doing other meetings to do with TCP program, fertilizer distribution, we have been invited to do the marketing on their platforms, of which now people came to realize, and we said, this program that you are doing with the fertilizer distribution, sometimes we can be giving people who don't own land. But with the help of these certificates, you are sure this person has land and is a farmer. So with the meetings and all this we had, it was so easy in terms of marketing our project and our products. With chiefs, certain chiefs had to organize certain meetings, and I'll give a practical example of Chief Dennis Mukanda, where we went to given a platform there to explain ourselves further, so that the donors, head persons, they can understand the essence of this project. So with this, after that meetings, the head persons also went on spreading the name, the word, and the donors. So this is how the marketing strategy was for the previous works that what we carried in these areas. In terms of client registration and digital banking, this is to do with the customer onboarding. And as MFinance, we had to introduce a digital onboarding process that improves the customer onboarding experience by enabling and authorize the MFinance agents to use the USSD to have access to their finances, and also to use an app, especially on a mobile phone, especially with those smartphones. They can download an app with it to do with a client app or an agent app, where you can open an account or using an app, in a savings account. You can book in anyone using a smartphone, which you can which has functions for this MFinance agent app. And with this, I think it was so easy in some areas, but in certain areas, because of the network problems, it was taking time. So we were even just manually distributing forms they fill in. So for those who are to do things, and for distributing forms they fill in, so that we can do it from the branch, which is a central place. And in terms of KYC in the recruitment exercise that we carried out, what was required for one to be part of MFinance is do with the first place, you have to provide a national registration card, the physical address. This physical address, that's when we used to use the customer line certificate, because they will know that this person is the owner of this place and that's where to find them. So with the line documentation that was done before, it really helped us to meet the KYC requirements. And then also are distributing the mandate cards, which were assigned, which are specimens, which are attached to the client's account. And there you take also a picture of a client, because you cannot be keeping money without knowing how the client looks like. So that's the KYC that we use. There are certain things that we waived off because of in villages, it's very difficult to, especially with tax bill. By that time, we had to waive off because it was very difficult for those people to have that. Yeah, and then in terms of lessons that we learned from this project, there are many lessons that we learned, but I will just spotted some where I came to realize that no, saving for a purpose was a major driver. And this was highlighted, especially when we had to start giving loans in form of inputs. That's when people came to understand, because the most requirements is for them to have an MFinance savings account. So with this, they saw, no, I think I can access something from MFinance. I can access and let me open an account. And then there was also another client, Emily Repeat, she was one of the first clients who joined us in May, where she said that, no, let me open this account so that I can be saving something which will help me to acquire inputs in November. So I looked at her commitment and dedication to what she planned. And that's what I learned from them. Most people came on board, especially because of a certain goal that they wanted to achieve. And then there was a majority of our bank keep money in homes. And this most of them, when you ask them, how do you keep money? No, we just put in bottles. So from there, we came to realize that no, the project was very valuable, because with the way people keep money, it was not helping in terms of economic development, even for the country. Because it's like they're just removing money from circulation, just putting homes there, idle, not even making any interest. So we had to explain to them that with these savings accounts that we are rolling out, if the balance is about 500 kwacha, you'll start earning interest for you, instead of just putting money idle there, removing from circulation, which is not helpful. And because of this, we are given a practical example of a certain story to do, which was just like, usually call it a Bermuda story, where I was a farmer who was putting on a Bermuda, and most of the times he was going to his garden. When he sells, he puts money in his Bermuda. When he knocks off, he removes it, he hides it somewhere under the tree. The wife, the family didn't know where I was taking the money. And now at one certain rain season, it had to pour. For 3 days, almost 4 days was just pouring. There were floods all over, and then that Bermuda was carried with floods. So after the rains finished, he had to come out. He had to go and check where he was putting his Bermuda. He discovered that it was not there. He was moving from village to village looking for a Bermuda, asking for a Bermuda. People thought that he was mad, but not knowing that his savings was in that Bermuda. So with that, we came to stress that no, there was no security. People in villages, those in churches who are treasurers, they keep a lot of money just in their homes. They don't even sleep because they are holding on to a lot of money. If money is gone missing, there will be a problem. But if they have a savings account, at least they can even sleep peacefully. At least a security is guaranteed. So with this explanation, we came to understand that with this project, that okay, these people really need help in terms of securing their funds. And also in terms of partnerships, attracts other partners. The partnership that we had with USAID it drew attention to other partners like Good Nature Risk Shield when they said, okay, with this, we can also work with you because the people that you are working with are our target, that's our target market in terms of good nature with farmers. So we said that, okay, let's merge into this. So with this project, I think it attracted other partners. So in this, I came to understand that really they are appreciating the works that we are doing with the help of USAID. And the unbanked rural population can provide cheaper funding through savings for MFinance. We also came to realize that no, in rural areas, there is money, liquidity is there. People just fear other people. Questions that we're asking: why don't you have certain savings accounts? They would give that no. When you open an account with a certain bank, you will find that 3-4 months, if you haven't gone there, you will left some money. You find that the money is gone because they're afraid of monthly maintenance. No, they are too high monthly charges, account charges. They were complaining of that. But we gave them an assurance that this savings product has got no maintenance charges. It only has a 20 kwacha book balance, which is a minimum balance. So with that, they realized how cheap it was, and they said, no, with this we are going to open, and that's how most of them were able to bring them on board. So with this, I came to, and just these are a few lessons that I thought of sharing with you in terms of what I observed in this project. And then just towards this, I would ask myself, why serve unbanked populations as in Madison Finance and the partnership that we went in? I thought like this is like a motivation for Madison Finance, especially to positively transform the lives of the people we serve. Because one of the major, in terms of what we believe in terms of mission statement is about transforming the lives of the people where we are operating from. So with this, I thought, no, it's very important to help these people, and through savings products, people are able to grow their savings. Others, they have opened their investment accounts where they have put, after they sell their farm produce, they have opened investment accounts which like fixed deposits. And also the other reason is enhance savings skills through deliberate financial literacy programs, which was very imperative for these people. Because of financial literacy, people are very behind. They just feel like banks are just for the people who work. On this, I tell them, no, actually, even you people here who are working, your offices are the farm, they are the fields. These are your offices. You're also working. Don't think, banks are just for people who are in white collar jobs. That no, those are the people who are supposed to go for banks. No, banks are there because of you. Money comes usually from these places. When you grow your farm produce, you buy things, you will take money in town where you go and buy other certain commodities that you need. With this we came to stress that it's very important to try by all means to improve the financial interest of these people that we are working with, and in these areas where we are implementing this project. So we had to organize and to do a number of financial literacy training programs. The other aspect is to make financial services accessible, affordable, convenient to the unbanked individuals by designing suitable products for them. This came especially after that we thought of like in terms of product designing. That's when he said no, because we have realized and we've learned that people are afraid of opening accounts in services because of the charges, maintenance charge. So we thought of no, let's introduce this MFin products, which has got no charges at all, so that these people, it can be affordable to them. And also introduce a mobile platform so that the accessibility is okay. It's not all that difficult in terms of if they want, sometimes if you want to buy talk time, they will have to move distances. But now with this mobile platform, it's very convenient. Just where they are, they just dial their feature code and they are able to access the services. And they came to realize that the mobile platform is also it's very low in terms of operation costs, in terms of the services that you're offering on this platform. And also the other aspect is to deepen their outreach in the peri-urban area and rural areas. These areas, they have been left out, especially when it comes to the banking system. And we're interested, we said, no, let's widen our market by reaching out to this area so that we can also put our presence there. And the other aspect is to provide secure means of savings, as I elaborated earlier, where people end up being killed over financial issues because of a secure kind of savings. So with the introduction of savings products, at least their funds are safe. And also to create insurance and market linkages to existing and future customers, because this also is one of our motivation, because the clients that we work with, our clients, we try by means to try and look how best we can improve their livelihood by at least finding certain partners whom we can, or certain markets whom we can link them to. Like what happened with Good Nature, it was a plus, and we felt good that, okay, this is happening. And that partnership, it was for 2 years, even for the coming season is supposed to take place, so that more can benefit from this. And they are eager to be part of that kind of partnership, so that they are linked to this off-takers, so that they appreciate, and also the prices on which they can also sell their farm produce on a good price, And also enable informal saving groups and the less privileged to link with the financial institutions. Yeah, because with us going there, it means also other financial institutions will follow suit, because in terms of, because we are now able to provide other requirements which they were lacking if the other financial institutions was to help them, especially in terms of credit history. So with this, we are able to link these farmers to if they are asking for products that we feel we cannot provide to them, which is, we can say, okay, there's also this, there's also this, what we provide also, that's why they don't fear. Because others ask, no, if you they were even saying, no, if you are not here, what should be done? If there is no an agent for MFinance, what should we do? We said, no, there is MTN. You can do on our platform. You can transfer money from MFinance to MTN Mobile and do everything. And you can access the services. So in conclusion with my presentation, I just say that MFinance has grown a mutually rewarding and beneficial relationship with the communities across the chiefdoms of Munukwa, Mkanda, Mshava, and part of Chief Chanje. The Chanje's chiefdom and Chinunda, which is ongoing and is worth continuing by expanding the same relationships in other areas. And I will end up by saying thank you very much for your time, and we are eager to hear more contributions and questions that we can see how we can work together. Thank you.
Great. Thanks so much, Makupa. Really appreciate the insights and the experience. I know I have a number of questions, and we have a few minutes before we jump to the Risk Shield, but I'd love to open it up to others. There is a bit of background noise, Makupa. It was occasionally hard to hear, but I think we all got the points. Would anybody like to come in? Just feel free to unmute yourself. I can jump in. Is there any questions from the audience? I know it's in a personal situation. We jump into a tea break right now, and there'd be a lot of questions and discussions and pushing, but sometimes we don't raise the questions here. Makupa, do you think, I'll raise one. It's clear that you have a number of different products. you have your savings product, you have a loans product, and other places you've used, sort of a group village savings type approach. Are all of these products available to the communities, or do you need to sort of target just one or two products in each activity? Or how do you sort of decide what range of products to offer to these communities? And the second question is, with USAID specific support ending, now, how did this work continue? Is it self viable with your agents out there already? Those two questions.
Okay. Yeah, in terms of a range of products that we offer, it's not just the two products to do with loans and the savings. There's also investment products, and in Chipanga area, at least I have almost about, I think I had 2 clients. The one opened with fixed deposits for 2,000. Then the other one opened the fixed deposits worth 60,000. So it's a number of products which we introduce in this, and it's not just limited for loans and savings. Yeah, it's a more, we keep on developing and see which products we can continue adding to this, but it's open to them. And also to do with in terms of loans, there is also asset financing. There is also one who is a potential client. We gave him an outline on or we gave him the requirements because they were thinking of buying an asset for them in terms of transportation. So we had to explain to the client who is Davison Peel in Nguluve village on how to go about that so that we can assist. So there is open, there are a number of products for them. And then in terms of continuity after the post, in terms of support from the US idea, I think even at the moment we are still we are still in touch with these farmers in terms of agents. We are more using of agents, and also we have at least a week visitation, at least one day in a week, where we go around, you monitor and you see what is happening, because we also assist them in terms of float, because this time a lot of people is liquid there, so cash is there. So in terms of depositing, we assist the agents with float. So most of the times I usually visit them. Yeah. And with our presence, if we just not be going there to get a few at the projects then, but when they see our presence more frequenting their places, it has more value to them, and that's how we're going to keep it live. And we keep on, sometimes, most of the times when I go there, I still open maybe 1 or 2 accounts, just like that. It's an ongoing process. Thank you.
Great. Thanks so much, Mukupa. And we've had interest here from His Royal Highness Chief Nyampande, who's asking, whether it would be possible to share a list of all the products. I think right now we're all keeping it in our heads, but I think we would love to see sort of a list that we can share with the stakeholders here, so that we see what the whole opportunities are. That would be sort of a follow-up note, Mukupa, and we could assist to share that list out with those participating.
Hello.
Great.
Yes, I've read something from Gary, the team, about the products. Yeah, I think there is no problem. We can do that in terms of the list of products that we offer. It's fine.
Great, and we'll assist in sharing that out here. Kandwani, did you have something to jump in on?
Hello, are you getting me?
Yes, Kandwani, we hear you.
Okay. I'm from Madison Finance, and I had the privilege of working on the same project. Just to add more to what Mukupa said, you find that the products that we offer are products that are offering solutions within the community. For example, the savings product is to offer solutions for the safety of their funds. Then two, when you talk of the investment, the term deposit accounts that we are offering, the challenge that I have in the community is that it's difficult for financial institutions to give them loans because they've got a seasonal kind of income. There's the income that they find after the harvest of their crops. So to avoid that kind of seasonal income, what we do is that we sell investment accounts to them, because you find that most of these farmers, they'll even manage to harvest and sell up to maybe 150,000 kwacha, 100,000 kwacha. But at the end of the day, they use that money without keeping that money. So what we do, we help these farmers to say, with what you have found in your harvest, you can open an investment account that can give you a monthly income, because as Madison Finance, we are flexible. We can give someone the interest income on a monthly basis, quarterly, or at the end. So that monthly income gives them the continuous flow of cash. So which means we are providing a solution where financial institutions say we cannot lend you because you've got a seasonal cash flow and not continuous cash flow. So this, the farmers who have an opportunity to have a continuous cash flow that comes from their investment account. And this continuous cash flow can also help them to invest in their agricultural activities that they are having within the communities. Then just to also add value on the other partners, you find that some farmers within Chipangali accessed training from GIZ through the partnership that we have also with GIZ. These farmers attended the agric analysis training to know how to manage their agribusinesses that they have. So you find that these products and activities that were happening is to enhance their agric business activities within the same communities of Chipangali. Thank you.
Thanks so much for those descriptions, Kandwani, much appreciated. I think the big lesson for me here that was unexpected is the importance of these partnerships, and that the relationships that an MFinance with risk, with Good Nature, for example, and how different players in the sector work together to deliver the best of their products. I think it's also quite interesting the importance of, a farmer may not know MFinance from Agora or anyone else, but most will know MTN or 534, and to help folks understand that the benefits provide, for a number of services like Kandwani, like Mukuba said, in terms of being able to get talk time and building that credit history. So these financial literacy pieces are very important. So we are still roughly on time. Usually, again, we would take a chance for a tea break now. So I encourage anyone to do this informally and hop in and out. But we will keep going for the interest of time. And I'm going to turn us over in a moment to Risk Shield. Please do ensure again that you enter questions into the chat as we go along. I think many of us are very aware of mobile banking and the use of mobile phones. Risk Shield, in their presentation on weather insurance, may be stretching our minds a bit and learning a bit more. What I do also want to encourage you in a moment, and I will write in the chat, is those of you who are participating, if you're able to send to me by email or by WhatsApp, not by text, your information on your name, email, and phone, we will be able to provide a a stipend for talk time to anyone who whose name links up with yourself on the participant list. I apologize that the webinar did not ask you for that question at the beginning. It's the nature of doing this as a meeting rather than a webinar. I will type in the information in the chat, but you will send to me by email your name, email, and phone number so that we can make a talk time transfer to cover your bandwidth associated with this meeting. So with that, and the platform we will use is Tilt or potentially Konza 543 as a brief intro. So I can stop my share here, and Agritosh, are you ready to come in? Great, I think you'll need to unmute yourself. There you
Yes. Can you hear me clearly?
Yes, Agritosh, you're on.
Great. So can I start sharing the presentation?
Yes, please.
All right, thank you. So thank you very much for this participation. I'll just try to maximize the slide. Hope you can see it clearly. And yeah, I'll just keep the video on briefly, but then I'll switch it off for better connectivity. Okay, so thank you very much. So in this session, we wanted to present to you, how the data and some of the outputs from the USAID ILRG project was actually used for developing index insurance. Yeah, so maybe I'll switch off my video here. Yeah, that's fine. Okay, so so basically the main topics we wanted to discuss is just to give a very quick introduction to who we are and what we do very briefly, but then really to focus on, when we talk about agricultural insurance, what types of products are usually relevant for agricultural insurance, weather index insurance in terms of some of the basic concepts, and then, yeah, how exactly the data that was used from the USAID ILRG project was used for developing the product, as well as some of the other potential applications of the data, some of the key technical topics related to data, product design, and pricing, although this will be. And I think the last session might be quite an interesting one, because we'll be also talking about the different types of agriculture value chain stakeholders, be it banks and financial institutions such as MFinance, agribusinesses such as Good Nature, and many others, in terms of how, what should be their business case, or what could be some of the potential benefits for them to actually integrate agricultural insurance with the other services that they are providing to their customers. So that's the plan for the next hour and a bit. I think in between we'll also be switching between myself and my colleague Joseph Kakweza as well, just to have a little bit of variation in the speech. Okay, so moving into the main, just to give a very quick introduction to who we are as Risk Shield. I won't spend much time on this at all, but just to say that, yeah, so we are basically a company. We've been around for about 6 years now, based here in Zambia, but we're also operating in many other countries. So we've worked in over 30 countries now, in partnership with many different insurance companies, reinsurers, and also value chain stakeholders. Those are some of the things we get involved in terms of technical and operational support related to inclusive insurance. Just a quick snapshot on the major countries, or the countries in Africa where we've been quite active. So we've done a lot of work, of course, in Zambia, as well as many other parts of Southern and East Africa. And we've also been fairly active more recently in West Africa as well, and some parts of Northern Africa as well. We've also got quite a bit of experience from other parts of the world, like Asia, Australasia, and so on. All right, so with that introduction, in terms of agriculture insurance for small-scale farmers, so as you might expect, for various reasons, this is an extremely challenging thing to do in the first place, because as was quite clear from the previous presentation, that there are many different barriers and challenges that farmers and indeed the general population in, say, rural areas of Zambia, for example, would face. And insurance by its nature is also quite a complicated financial product. I think it was interesting, some years ago, a farmer we were talking with actually turned around and said that, but this insurance, it's like it's a very vague thing. So it's like a promise that someone in Lusaka is making, that, okay, if they have a problem with their, half an acre of maize in Chipata, that company will pay them a compensation. But it's really a promise rather than actually seeing a, like a tangible benefit or a tangible, say, product that is being delivered at the outset, such as loans or farming inputs and so on. So that's one of the challenging aspects of agricultural insurance. But so basically, with agricultural insurance, essentially there are many different types of products. I think for today's purpose, we'll focus mostly on the crop insurance products, and within that on weather index insurance. But basically, the concept in a way is quite simple, similar to any other type of insurance, that you have basically the farmers are transferring a risk of an unknown or uncertain event, let's say drought or floods or pest and disease incidents and so on. They're transferring that risk to an insurance company. And that transfer is being done by purchasing an insurance product. So that insurance product, in the case of crop, it could be on an indemnity basis, in which case, if the farmer has had a loss on his or her field, they would have to prove that there has been a loss on their fields for these specific reasons. Insurance company would have to either visit the field themselves or send a representative and verify that it is indeed a valid loss for which an insurance claim can be paid out. And then if that is the case, then the claim is paid out. So as you can imagine, indemnity insurance is typically quite difficult to do for small-scale farmers, given the small size of plots, the fact that these plots are scattered around in different areas, the sheer number of farmers as well. If, as Matt was presenting earlier, they've been documenting tens of thousands of plots. As you can imagine, if those farmers were insured on an indemnity basis, you would have at least hundreds of claims every year, maybe even thousands, but at least hundreds. And for someone to actually go around verifying those claims physically, you can imagine is an extremely challenging process, given some of the infrastructure problems as well that Mukupa highlighted earlier on. So typically, indemnity is, it can still be done under certain circumstances for small-scale farmers as well. But it's very challenging, and certainly in Zambia, I would say it's very difficult to do pure indemnity insurance product for small-scale farmers. Weather index, on the other hand, is a product that has been around in Zambia for some time now. So indeed, as Risk Shield, we actually started the weather index products in Zambia back in 2013 or eight years ago. And since then, a lot of different products have been going on, covering different types of crops in different parts of the country, integrated with the private sector, as well as you might have heard, with the government's FISIP program as well. So we'll be sharing some of these case studies a little bit later on today. And then yield index. So with weather index, basically the underlying basis of the product is an index. which can be based on data from satellite or data from weather stations, for example. So the point being that it's not based on the farmer's individual experience with their crops, but it's based on the weather conditions that has been experienced in that particular area. So if the data allows, then it can be the weather experienced by even individual or groups of farmers. But otherwise, it would typically be the weather experienced by, let's say, at a village level or at an agriculture camp level, and so on. And yield index is, again, it's an index insurance product where the underlying index is the average yield that has been experienced in a particular area. So again, it's not based on the farmer's individual losses. It's not based on the farmer's individual yield either, but it's based on the average yield experienced, let's say, at a village level or at agriculture camp level, and so on. So those are the main categories of crop insurance products. Typically, what we see is for small-scale farmers, certainly in Zambia, weather index and as well as yield index potentially are more viable options. Indemnity is typically extremely difficult to do for crops. Livestock, very briefly, so again, you have the similar categories between indemnity and index products. Indemnity is where if a livestock dies, for example, or is ill, there would be a compensation for that individual loss. And index is where the basis of the compensation is an underlying index, which can be based on vegetation conditions or weather conditions experienced by the livestock as well. All right, so just to kind of compare for the crop insurance categories, these different main categories of products, what we see is visible or recommended. So it's usually, it can be quite feasible if the farming is rainfall or weather dependent, if it is small scale farming. And if there is, proof that overall the weather data being used is fairly accurate. So if we're using satellite data, for example, then that data is actually capturing the experiences on the ground, at least in terms of capturing the major, let's say, bad seasons or bad droughts or heavy rainfall events or flood events and so on. When is it not recommended? So if the farming is heavily irrigated, weather index tends to be less relevant, right? So the idea being that if the irrigation, let's say if it's large scale farming with a lot of irrigation, then to some extent, to a large extent, the weather parameters can be controlled. So to that extent, let's say the farmers are not exposed to a drought actually happening or even let's say other fluctuations in the weather conditions happening because they can control the weather conditions. So in those circumstances, it's not so much recommended. Also to do with the accuracy of the product or the accuracy of the weather data, or if there's an expectation for someone from the insurance company to actually come and visit the field, then in those circumstances, weather index would not be recommended. With the other products, generally speaking, with yield index, it again comes down to the accuracy of the data, whether it is representative of the farmer's experience, how quickly is the data available for the payout to be made. And those are also challenges if, for example, the data is not available or it cannot be collected efficiently, if there's a poor correlation, a poor link between the yield index and farmers' losses. Those are some of the challenges with yield index as well. When it comes to indemnity, generally speaking, it is feasible if there is very good quality historical yield and loss data, ideally at the farmer level. If the loss assessors or basically the staff of insurance companies or representatives of insurance companies are available for doing the loss assessment. And if this cost can be actually absorbed into the premium rates. So the insurance premium is basically the cost of the insurance products. So if the cost of carrying out these claims assessments can be efficiently absorbed into the insurance premium rates. A few other technical requirements are also needed, such as the underwriting requirements of insurance companies. Now, as you can imagine, for Zambia, indemnity products are quite difficult because, especially, well, in the context of small-scale farmers in Zambia, because it's very difficult to apply without presence of a good claims management system. The loss data, the yield data may not be available. It may not really be possible to monitor the farming practices as well on a reliable basis. Okay, so with that background, and some of these points I'll be returning to when we look at also some of the applications of the USAID ILRG outputs into some of these different categories of products. But without further ado, we could look at some of the key concepts of weather index, since this is the product that was developed as a part of this project. So what we did in this project is, as Matt was presenting earlier, there was a lot of data collected, as you can imagine, of tens of thousands of plots of land. There were hundreds of villages. I forget the exact number right now, but there were a very large number of villages for which GPS coordinates were also collected. Now, this data, I mean, starting off with the GPS coordinates, that's the latitude, longitude, or the location of where the farmers are actually located. This location data was collected as a way of, linking it to the land documentation that the farmers got access to through this project. Now, that data is also extremely useful for accurately monitoring the weather conditions that the farmers are actually experiencing during the season. So what we did is, there's an option of potentially using weather stations. But we know for example, these locations in Eastern Province where the project was ongoing, there were very few weather stations available. There was one in Chipata, there was some rain gorges in Katete and so on. But, often the farmers might be located, 50 kilometers more away from the nearest weather station. And indeed, the weather station, they were very limited, about 2 or 3, which are actually available in these target areas. So instead of that, we used satellite monitoring for the weather conditions, in particular rainfall. And we used the data from the ILRG database, the GPS coordinates, for extracting this historical satellite data sets. So we extracted the satellite estimation of rainfall values for the last 38 years from 1983 onwards, on a daily basis. So you can imagine it's a huge amount of data. Now that data was used for developing the product. So this data was available at different time steps. We used the data for every 10 days, also known as the decadal data. And that's generally seen as most accurate for Zambia based on the previous studies that we've also done on the accuracy of satellite data for different areas. Now, with this data, it was then possible to monitor on a regular basis. This was being done on a weekly basis, in fact. During the season, we were able to monitor how the actual rainfall conditions are emerging in these areas. Yeah, and so the typical conditions ensured. Okay, we'll talk about that a bit later on. But essentially, it included dry spells as well as excessive rainfall events. Now, once the trigger thresholds are reached, so for example, if we know what is defined as a drought or a dry spell, and as soon as that has been reached, then automatically we would know whether a claim is due or not. And that information can be shared with all parties concerned. So for example, with the products that were developed linked to the areas where MFinance was financing farmers, that information was shared with MFinance at the same time with the relevant insurance companies. It could potentially be shared with the farmers as well, if that's possible using mobile technology, for example. And then, so in this process, as you can see, there is no the provision for farmers to report losses or for insurance companies to go and verify the losses and then for the claims to be agreed upon and settled. That entire process is taken out. It's purely done automatically based on the weather conditions. So with these payouts as well, they could happen directly to farmers. But what we've seen over the years is usually when an aggregator is involved, such as a financial institution or an agribusiness and so on, then it can actually make more sense for the payouts to happen through the aggregator. We'll talk about some of the reasons why a little bit later. All right. So in summary, with weather index insurance products, they can be based on weather stations, although that is quite difficult to do in most parts of Zambia. But a good, the good opportunity that's there and that's been used over the last 7-8 years now is using satellite data for doing weather index, because the satellite data coverage is there throughout the country at different resolutions. And satellite data is also there for different types of parameters. So it's been the practice for various reasons that rainfall data has been used, but you can also access satellite data on temperature, on humidity, soil moisture, even parameters like wind speed and so on. So it's possible to monitor different types of parameters depending on what weather parameters are most relevant for that particular crop. A very important benefit of weather index products is it's possible to have payouts happening very early in the season. So this is a key benefit or advantage of this kind of product compared to, let's say, yield index or indemnity, where you have to wait until the end of the season and usually a few months after that to actually know what the yield was. With weather index, you can have payouts happening early on in the season. Indeed, with some of the insurance products we've seen over the years and implemented in Zambia, we've had products where payouts were triggered even in December, because of an early dry spell which took place, or because of late arrival of rains which led to to germination failure and so on. But of course, the speed of payouts, practically speaking, sometimes it's limited by the operational infrastructure, such as if let's say mobile money is not being used for doing the payouts, or depending on the arrangements between insurance companies and reinsurance companies, it could delay the payouts happening in practice. But still, we have seen cases where payouts have been made as early as December, January, during the farming season. And that actually makes it easier for farmers. The advantage from the farmer's perspective is if that payout is made either in cash or through farming inputs such as seeds, the farmer actually gets the time to plant again. So it's not a question of just waiting for an insurance payout or not at the end of the season, but they can actually use that additional money or the inputs for planting again during the season, which can actually help to even save the season, if a payout is made quickly enough. So that speed of payouts is a very key part of the value proposition of weather index products. And of course, the fact that these products, let's say using satellite data, we are using nearly 40 years of data now. That's, as you can imagine, a lot of data. So even with trends like climate change and higher frequencies of weather events happening and so on, it's still possible to use this rich source of data to actually implement these insurance products, and also to reinsure the products for the insurers to transfer the risks to other international insurance companies, which are known as reinsurance companies. Okay, so just in summary of the process, the way the data flow works is the data was extracted, in this case, from satellite sources, and it's compared to the different trigger thresholds and parameters. That data can also be used it is indeed used for the pricing of the products as well, and for revising the products going forward. And then in the event that the data is below a threshold or a trigger level, automatically it can trigger payouts. So in summary, for weather index, it does perform quite well for aggregate shocks, for events such as droughts or excess rainfall or potentially flooding, where a large number of farmers are being affected, or let's say a village is being affected, or even clusters of farmers are being affected. It is a very cost-effective way of claims being settled without having to send people to the field, or without the farmers having to figure out which forms to fill out for reporting losses and to prove that there is indeed a valid loss and so on. And it can be quite an objective and transparent basis for the claim settlement. There are, of course, several downsides which are very important to recognize. One big one being this issue of basis risk, which is basically a scenario where, let's say, the farmer has suffered a loss, but there is no payout, or even vice versa, where the farmers have not suffered a loss, but there is a payout. Usually the first scenario is what causes the most grief, as you can imagine, because a farmer might have had a loss because of, let's say, heavy rainfall event, but there is not a payout, or the payout is not seen as sufficient even. And that can happen for various technical reasons, and we'll actually talk about some of that as we look at how we use the outputs from the ILRG project to try and mitigate this issue of basis risk to some extent. Of course, there's some other challenges as well. As you can imagine, this product, it would be quite difficult for farmers to fully understand. It is ensuring the weather risks only, rather than also non-weather risks, at least directly. So these are some of the downsides, but again, there are different ways of dealing with these, or different ways in which, for example, the understanding of farming of farmers can be improved further through sensitization, through doing very targeted training of trainers, and indeed with, for example, with some of the work that organizations like MFinance and Good Nature Agro are doing. Some of these sensitizations can also be cascaded down to the farmers through these trainings. Okay, so we'll move on to some of the, just to talk about some of the key risks to consider for weather index insurance. So as I was mentioning, the most relevant risks we see in Zambia are risks such as drought, excessive rainfall, late onset of rains, early ending of rains as well. If possible, if the data is available, additional risks can be considered, those to do with temperature fluctuations, or to do with low soil moisture, for example. It's very important as part of the product design to actually collect information about the nature of the crop. So this is one of the steps we took when we were designing the product. Is we had discussions with MFinance, with some of the other stakeholders involved in the Eastern Province, to really understand which crops are in scope. So in this case, a lot of the crops were actually leguminous crops like soya, groundnuts, and so on. So we took into account the crops, the farming practices, the crop cycle, and also which weather risks are most relevant in which part of the crop cycle. We also took into account the fact that with weather index, we are really trying to address the aggregate types of risks. So those risks which are more likely to affect a large number of farmers, let's say at a village level, such as drought. So we're not focusing so much on the the individual level of risk that might be affecting individual farmers so much, but more of the aggregate risks which are affecting a group of farmers, so the community basically. We took into account the feedback from aggregators such as MFinance on what types of risks need to be covered. So there was a few iterations, or a few feedback sessions we had with MFinance on this. And we also carried out some focus group discussions with farmers themselves in some of the different chiefdoms. I think Joseph can go into a little bit more details on that, where we actually collected feedback on the relevance and description of these different risks. So using this information, we developed very tailor-made products. So I'll be now talking about what product exactly was developed and how. I'll keep this section fairly brief because it can get quite technical, but I'll just to highlight the most relevant points here. So with this product, I mean, one of the interesting features of this product was that the coverage was actually over quite a long period of time. In fact, as we speak, the coverage is still ongoing. So it covered the first 8 months of the year, from January to August. Now, the reason that this coverage is so long, so so generally with weather index products, the coverage is linked to the rainy season only, because obviously if the underlying basis are the rains, then it makes sense to monitor, for the insurance coverage to be there during the rainy season only, which typically ends by March or April. But in this case, we actually, we were asked by different stakeholders to consider, to see if there are ways of extending coverage all the way until August. And we were able to do that by focusing on some specific risks for the off season. So basically from April onwards, the risks are very specific, related to unseasonal rainfall. I'll be talking more about that as we go on. We developed these products for many locations, so about 55 locations in Eastern Province, using the GPS coordinates from ILRG. So these locations, we basically we used the GPSs of individual farmers and then clustered them around the different villages where the farmers are located. So the historical rainfall data was used for these 55 villages for developing the product, and we also carried out a monitoring of the season, basically, which we'll also be talking about. Now, the value insured, because these products were they were linked to the loan that was being given out. So the value insured is, in this case, was actually the full amount of the loan. So the loan principal amount. Now, that's just one option. It could have also been linked to cost of specific inputs. It could have also been linked to the expected revenue, and so on. It could have been a fixed cash amount as well. In this case, because the main stakeholder we were working with was MFinance, it made sense for it to be linked to the loan amount. So it was also a way of basically MFinance's credit risk being reduced because of having the insurance coverage. The premium rate came to 8% of the loan principal amount. I'll be talking a bit more about how that rate came about a little bit later. And the typical risks being covered were dry spells, including in the early part of the season, as well as the late part of the season. Also in-season excessive rainfall, as well as post-season excessive or unseasonal rainfall. Now, so basically with some of the parameters to just to familiarize ourselves with was the trigger level. So that's the threshold at which the payouts start. The exit level is the point at which the maximum payout is made for that particular risk. And then you would have a rate of payout, which determines how quickly the payout increases. And then you would also have parameters to do with the minimum payout and the maximum payout. So the total payout is basically a summation of all the different payouts. So you can have a scenario where a farmer receives a payout for early season dry spell, as well as late season dry spell, as well as, for example, post-season excessive rainfall. So it's possible for payouts to be triggered by all the risks which were being covered. Now, to go into the details a little bit more, when it came to dry spell, we are basically covering the risks from January until end of March. And the payouts would be made if the total rainfall over 20-day time periods for the early part of the season, and for the second part of the season over 30-day time periods, was below the trigger level. So the point being that essentially dry spells were being covered, but bear in mind, this was not, like a complete lack of rainfall over 20 days or 30 days. No, it's basically if the rainfall is below a trigger level, so it's much below the normal rainfall for a 20 or 30-day time period, then automatically there would be a payout. So one other feature to point out is we had this feature of having partial payouts rather than having full payouts for every peril. So this is quite interesting and relevant. That so the idea being that if you would have, say, a maximum payout of 100% for any one risk being covered, then that leads to either a very expensive product, which would make the product not affordable or not viable, or it can also lead to a very risky product as well. And of course, it can also lead to the product having a very strict trigger level, which is very unlikely to trigger even in a bad year, which in turn would lead to this issue of basis risk, as I was mentioning earlier. So basically, it is important to have partial payouts in the structure rather than having the maximum payout being triggered for each peril. So that's to do with the dry spell. With excessive rainfall, again, we had a similar structure, but a little bit different, where season that was from January until end of April. And then we also have a post-season excess rainfall cover, which is really, it's more of a post-season unseasonal rainfall cover, really. So it's to do with the fact that if you have rains happening beyond May, it can actually cause problems because the rains are not expected at that time. So it can actually cause problems with when the crop is matured, and if there's an unseasonal rainfall, it can actually affect the crop, and it can have an impact on the post-production, post-harvest risks as well. So that was the nature of the weather risks being covered in summary. So when we did the monitoring, let's say with the dry spells, for example, one of the things we saw is, so to give examples of the trigger levels, they typically varied between 80 millimeters to about 120 millimeters, depending on the village. So we had trigger levels which varied by the different villages, so that the price remained the same. So there was an option of either varying the price or varying the trigger level. We decided to vary the trigger level so that the price of the product remains the same, sorry, which actually makes it viable from the financial institution's perspective, having a fixed premium across all the loans that they're giving out. So typically we saw with dry spells, generally it was, the rainfall was quite good in this season. So I think for all of the locations, for both early season as well as late season, we didn't observe any issues with dry spells. So the actual rainfall was actually higher than the trigger levels we had for the different areas. Yeah. But when it came to excessive rainfall, okay, so this was interesting because we saw that in some of the areas, the rainfall was actually the observed rainfall was actually higher than the trigger levels. So this was especially the case with the in-season excessive rainfall monitoring, where we saw that for some of the locations, say the trigger levels were between 70 to 100 millimeters of roughly, and in some areas rainfall went up to about 120, 130 millimeters. So there were actually payouts triggered because of this, because of the excessive rainfall during the season. But as was mentioned earlier, I mean, unfortunately, because of operational reasons, these products did not actually go live, although they were developed and implemented with MFinance, but it wasn't. The cover was not live, because otherwise we would have actually had seen some payouts made in these areas because of excessive rainfall. Interestingly, of course, we also did some ground truthing, or some verifications based on what was experienced in some of these chiefdoms, and we also heard issues of excessive rainfall in some of these areas. Maybe when we have the Q&A, we can also discuss if if that's something that you also saw in your experience, or you can also type in the chat box, of course, around that. Okay, so that's basically the in terms of the kind of monitoring that has taken place so far, and we'll be also updating the monitoring for the post-season coverage in a few weeks' time and by the end of August as well. So overall, taking a step back outside of the technical nitty-gritties of the product itself, how can the data from the USAID ILRG data that was mentioned earlier, what are some of the applications that we see in the context of both agriculture as well as other inclusive insurance products? And also a little bit on finance as well, just to add a little bit more to what Mukupa was presenting earlier. So when it comes to insurance, with agricultural insurance, we see a number of potential benefits or applications of this data. First, let's say the villages or even the individual party of it can be used for rainfall monitoring. So as a result, more localized granular level, and that would ensure that the products are more accurate, that when there is a drought or excessive rainfall event like what happened this season, the events are actually picked up accurately. The more granular resolution also leads to, it's a little bit of a technical point, but it's quite important, that it actually leads to a better spread of the risk as well. So instead of, let's say, having products at a district level for Katete and Petauke and Chapata, you can have products for hundreds of villages in the same area. And by doing that, you're actually spreading the risk more. And if you spread the risk more as an insurance company, you'd actually reduce the premium. So it can actually lead to lower premiums because of a better spread of the risk, which also makes the aggregators or value chain stakeholders. Of course, the localized events such as localized excessive rainfall, potentially other events like localized flooding, which is also very relevant in Eastern Province, even as what we saw this season as well. Those events can potentially be monitored on a more accurate basis because you're using this localized data from USAID ILRG. A couple of other points, which this might be a little bit controversial or something which can be looked at or can be discussed later on. But potentially, if the farmer level, so outside of the GPS coordinates, if other data points like phone numbers or other farmer-specific data points can be shared, then that could actually be applied in different ways. One is for insurance companies. They could actually use this data for cross-selling other products as well, such as health, microinsurance, funeral, life cover, livestock cover. So it can make more targeted, cross-selling of other insurance products. And also, very importantly, if let's say if the phone numbers are used and if the farmers are accessing mobile money, for example, then some of these processes like premium payment, claim payments, can of course take place using mobile money. Apart from mobile money, the phone numbers can also be used for, let's say, targeted marketing of the insurance product or customer awareness raising, also for providing any value-add services like advisory services, weather forecasts, or crop advisories. So all of that can be done at quite, all the way at the farmer level, if the farmer level data is also accessible. But as I say, it may not be within the scope of this particular project given data confidentiality issues. But that's something which maybe one can discuss afterwards. Of course, the locations also makes it, having this precise location mapping also makes it easier for claims monitoring for some of the other types of products as well that I was talking about, like indemnity-based products, yield index products, and so on. So in other words, if you actually know where the farmers are located, You don't have to, do guesswork that, okay, they're based in, this particular chiefdom or this particular camp. You actually know where they're located. So it's possible to, if other products can be launched, then it's also possible to monitor for more easily monitoring, what's actually happened in that particular farmer's fields. So all of this, the more efficient claims monitoring, more efficient insurance risk assessment, and so on, can actually lead to lower expenses, should usually lead to lower expenses incurred by the insurance companies. And that in turn would lead to lower expense loadings within the premium. So that also from the farmer's perspective and the different value chain stakeholders, it can make the products more affordable for all the stakeholders concerned. Just a quick point, referring back to the previous presentation, I think one of the areas we would have loved to explore further, but there wasn't really time left in this project, but one of the areas was also around looking at, potentially looking at risk scoring. So all the satellite data that we're using, close to 40 years of data now, apart from pricing insurance products and designing them and implementing them, you could potentially also use this for, having a risk score. So I know for the bankers and financial institutions on the call, you're very familiar with concepts like credit scoring for customers. Of course, it's not possible to do credit scoring for small-scale farmers who may not have any kind of credit history. But if you use satellite data, you could actually do a form of risk scoring or risk assessment based on the kind of weather conditions that they have experienced over the years. So this is something which could be really interesting and useful to explore in the near future, to see whether this kind of risk scoring can also improve farmers' access to finance, especially where there is an absence of collateral otherwise. Okay, so that concludes, how some of the ideas and also some of the ways that we had used the data from USAID ILRG for the product development. I just want to talk a little bit more about some of the technical topics without going into a lot of detail. But in terms of data requirements, really the essential data you need for developing these types of products are to do with location. It's to do with
just a quick thought. Maybe sure. You could answer some of the questions that have popped up in the chat while it's still fresh on people's mind.
Sure.
Patricia Malasha asks about whether these products extend to non-weather risks like crop disease, which in some ways are triggered by weather conditions. BM013 was asking about how agro products are insured. And let's see, the Patauke District Land Alliance was asking about events prior to January. And then finally, there was a question on other partners from the private sector like Medem and links to GRZ extension services. So if you want to reflect on anything before jumping into the data again.
Yeah, sure. No, thanks. And no, sorry, I didn't actually see the chat questions earlier. So I can, so just to go into some of those questions or responses to them. I think in the non-weather risks, that's a great question. With weather index products, they do not cover non-weather risks like disease directly. Yeah, because they are, I think with covering crop diseases, it's quite challenging for various reasons. I mean, one is to do with the data, but even beyond the data, there are other issues like, in a lot of cases, insurance companies or even reinsurance companies might not want to cover diseases as well, because these could be risks which are, they might see that these are risks which are manageable, which can be controlled by the farmers. So if they are covering those risks, then they're opening up to like moral hazard, or the farmers not practicing good farming practices and so on. So, but apart from that, I mean, the data side as well makes covering diseases through an index structure quite difficult. Having said that, it can be, so as you mentioned in your question, if the weather conditions are leading to crop diseases, then yes, it can be covered indirectly. So to give you a quick example, we developed a product for Rwanda some time ago related to for potatoes, and this was to do with the late blight disease for potatoes, which is very clearly influenced by combinations of temperature and humidity. Yeah. So in this case, if there were certain combinations of temperature and humidity conditions, then automatically there would be a payout. Similar products have also been going on in India, in fact, with believe with Pepsi as well, which I think ILRG is also doing some work there on the same with potato farmers that Pepsi is working with. So yeah, so that's one of the ways, but it doesn't cover diseases directly. So that's one of the limitations of weather index products. So okay, then in terms of I guess one of the other questions, so maybe on the question from Cassandra, that if what would happen before if the events happened before January? Yeah, so that's an excellent question. Again, I think it's so ideally the coverage should have started actually earlier. So this is one of the reasons also why this was one of the technical reasons why we also, it did make a lot of sense to still continue with to implement the insurance product this season, because by the time that we knew about if the product can be implemented or not, it was already I think around Christmas time, literally. So a lot of the risks or a lot of the planting practices, a lot of the farmers had already planted in November, even October. So ideally the coverage should start earlier. So in this case, the coverage was from January, simply because of operational factors and because everything was delayed with also the disbursement of the loans and inputs and so on. So I think that's the main reason why coverage started in January, but ideally it should have started earlier. Maybe, so I don't know if there's maybe the question on Medim, I would skip that one. Maybe that could be dealt with afterwards. The question on, okay, efficiency lead to cheaper products for farmers or higher profits for providers? Yeah, that's a great question. So I would say both, to be honest. I think it's really both. There's the, so definitely it does lead to cheaper products for farmers as well, because I mean, let's say the example I gave of the product that was priced at 8%. If you look at the actual component that is going towards that is allocated towards the underlying risk, it's about approximately 6%. So the additional 2% is basically to deal with the insurer's margin and basically the different loadings involved, but it doesn't include a very high loading for expenses. But if a similar product, if you had a similar product with let's say physical loss assessments, that would have easily gone up to 12% or higher, because the expenses of doing the verifications and the risk assessments would have been much higher. So in other words, with weather index, they can still appear, they still are fairly expensive products, definitely, I would say. But the reason for that is to do with the types of risks which they're addressing as well, which are which they're trying to mitigate, which are very frequent risks, and when they occur, it's not like just a few farmers would be affected, but the entire village might be affected. So because of the nature of the risks, the premium rates become high, but generally there is an efficiency because of the reduced expenses, which translates to more of the premium being allocated to covering the risk rather than covering insurers' operational expenses. Yeah. So yeah. Okay. So should I move on with? Should I continue with the data section?
Yes, please. Thanks.
Yeah. Okay. Thanks. Okay, so just to summarize this section quite quickly, because I think the next one would be potentially more interesting on some of the operational factors and experiences. But generally speaking, on the data side, you need these types of data. So referring back to the work with ILRG, we use the data from the ILRG database for mapping the locations for different villages. Then we were able to use that for extracting the historical weather data. So in this case, we actually used close to 40 years of data since 1983 onwards. We also collected some feedback from aggregators and farmers on their experiences of losses and on what types of risks they experience, what types of weather risks they experience as well. So all of that went into the product design process. Some of the data which is generally good to have, although it's not strictly speaking essential, but it's good to also have the yield data, so the actual crop production data, if it's available. This, of course, is quite challenging. It's not always available, or it might be available at, let's say, the province level, or let's say at the district level, but usually it's never available at the village level, for example. But still, we collected some of the yield data as well for doing a validation of the product. We also, it's good to understand the planting practices, so that would help in deciding when the insurance cover should actually start and end, the extent to which the farming is actually rainfall or weather dependent. And then also to understand other economical factors like what is the cost of production, what are the loan values involved, what is the expected yield and price. So all of that would also help to determine what should be the sum insured values. So in other words, what should be the value that is actually insured. Now, with this data, that basically feeds into the pricing. So if I look at the main components of the pricing without going into all of the details, but essentially we did, this was an actuarial or risk-based pricing based on the probabilities of the events that are being covered, the expected size of the payouts when the payouts occur. We took into account some other statistical information as well. And then all of the features that we were referring to earlier on the product design side, such as the triggers, the minimum, maximum payout, the nature of the payouts, those were taken into account in the pricing as well. So with weather index, it is certainly possible, indeed, with all types of index products. There's a lot of scope of having products which are, quite cheap. At the same time, you can also have products which are more expensive. But one of the main reasons, or one of the main drivers of this difference in the pricing is it's not really so much to do with the insurers' profit margins and so on, or even the expense loadings, because as we were mentioning, the expenses are kind of taken out of the picture with because the product is automatic based on weather conditions. But it really varies by the type of cover being provided. So in other words, you can have a product which is as cheap as maybe 3 or 4% of the sum insured. But then with that product, maybe you're only covering the 1 in 20-year drought or 1 in 15-year drought. Yeah, which means the product pays out very rarely. But if you have a product that's priced at a higher level of, say, 10, 12%, then you might be covering the 1 in 5-year drought or the 1 in 3-year drought. So it's paying out more frequently, or when it pays out, it's paying out a higher amount. So it really depends on the kind of risk that is being covered that determines the costing of the product itself. And then, of course, some of these other factors also come into the pricing, such as the different loadings that are going in, tax, generally speaking, the insurer's strategy or the level of competitiveness of the pricing as well between different insurers. Okay, so in terms of, just to give you an overview with these products, the way that, they are typically done is, so the work that we were doing in this project as well was related more on the initial feasibility and technical assessment side of things. And then we also developed the product. So using the data that was collected from the farmers, from different agriculture value chain stakeholders, the product was actually designed, the product design, pricing, all of these functions were done. The monitoring process also started. We also started having discussions on the insurance and reinsurance placement as well. But then finally, because of the operational delays, the product didn't actually go live. We also had discussions with, we also had various iterations with MFinance on the distribution model. And some of the other operational models that come into play are capacity building and trainings, figuring out how the premium can be paid, how farmers can be enrolled. There's a lot of work around sensitization and marketing and capacity building of different stakeholders which come into play as well. And finally, finalizing the actual product documentation and contract before the product can be launched. So that's just to give an overview of the different steps involved. And a lot of these steps are also quite sort of iterative. So you might, let's say, design a product and then you might get feedback that, okay, the pricing has to be different or the structure has to be different, in which case you need to go back into the actual modeling of it and so on. So some of these steps, you might need to have a few different versions of the product before it's actually finalized. Okay, so I think the next section, which is the last section we have, is on the business case for agriculture value chain stakeholders and opportunities for rolling out these products. So here I would like to invite Joseph. If you're able to speak, I can navigate from my side in the interest of time. Joseph?
Yeah, thanks a lot, Agriculture. So yeah, I think as I said earlier on, working with small-scale farmers, it's best to offer this kind of insurance through some intermediary that can aggregate the farmers and then bundle the insurance with services and products being offered by these intermediaries. Of course, it's still possible to work with individual farmers directly, but of course, you need investment in other structures, like, for example, mobile money for the mobile money and digital platforms for enrollment, premium collection, as well as claims payment. Yeah, so in the absence of those arrangements, insurance can be offered through aggregators. Now, looking at our experience in Zambia, so in Zambia, we have worked with the different distribution channels. For example, the most successful one that we've worked with in Zambia is contract farming operation. So under this arrangement, insurance is integrated in contract farming operations, whereby farmers receive inputs, for example, seeds or fertilizer from the outdoor scheme, and then insurance, in this case, which can be whether it's insurance or funeral cover, is then added onto the credit and becomes part of the credit. And only the farmers can repay that at the point of delivering their crops to the aggregator. So we have seen since 2013, 2019, over 90,000 cotton-growing farmers being insured under this arrangement with some cotton outgrower schemes in Zambia. So in addition to contract farming operations, we have also experienced in working with financial institutions and banks, as well as MFIs. Typically, the example of Madison General, the engine finance, Kuba was talking about that arrangement where the financial institution gives loan to the farmers for agricultural production and for getting inputs. And that loan typically comes with insurance. So under this model, insurance is linked to agricultural finance, for example, the crop balloon loan products. So this for smaller farmers So this kind of arrangement, it helps in terms of reducing the credit risk for the banks and MFIs that are giving loans to the farmers. And of course, it helps the farmers in terms of improving access to credit. So in Zambia, since 2014, about 6 banks and MFIs have participated under this arrangement, where the bank gives loans and then the loan comes bundled with insurance. So one thing that we saw, for example, I used to be based in Rwanda, and what we saw in Rwanda is that most banks and MFIs never used to finance small-scale farmers. But when we came in, introduced weather insurance for small-scale farmers, we saw big banks like KCB for the first time moving to the sector and now financing small-scale farmers because the risk of bad weather was taken care of by the insurance. The other model that we have also experienced in Zambia is the model where insurance is linked to seed sales of seed companies. So this kind of arrangement can be used as a sales promotion tool for the seed companies. And so in this case, what happens is when a farmer walks into an agro-dealer's shop and he buys seeds, say for a particular company participating on insurance, that seed, the price comes bundled with the price of insurance. So you buy the seed, you also buy insurance. So in the event of bad weather, then the same farmer can get a payout in the form of replacement seed. So this one typically helps the farmer earlier on in the season. If there is a dry spell in the field germination, the farmer can go back to the agro dealer and get additional seed or discount on the seed, and you'll be able to plant again and proceed with the season. So with this kind of arrangement, the seed companies' input supply model, we have worked with two companies in Zambia since 2015, and we've seen it working very well for the input supplier because they were using it as a sales promotion tool for their brand. We have also worked with the farm organizations and in the time when certain FP was too active in the market under their Lima scheme, so they would use insurance as collateral for access to credit and farming inputs by the organization for the benefit of their farmers. So they would access loans from the banks, but of course they would use insurance as part of the collateral in terms of taking care of the risk of bad weather. We have also in Zambia worked with development agents where for example, the ILO did their program called the Yapasa. I think it was started in some youth farmers. So under that arrangement, farmers would access inputs from different schemes. And again, that those inputs would come bundled with insurance. So we have also worked with FAO, WFP, and a few other development agents for including insurance in their different activities and their different services.
Okay, so maybe I'll just go through the next few slides just to, we also want to keep enough time for the discussions. So basically, one of the models, as Joseph was mentioning on the contract farming side, just to summarize this, basically the way this works would be with the contract farming company when they are giving inputs potentially on credit to the farmers, or maybe the farmer is buying it in for cash. Insurance would be either bundled with the inputs, so attached to the inputs, either on a mandatory basis, or it can also be done on a voluntary basis. So we've had both examples in Zambia where farmers have purchased the insurance on a bundled mandatory as well as a voluntary basis when they're accessing inputs from the contract farming company. When doing this, a key feature of this model has been that the contract farming companies, generally in those cases where the model has worked quite well, the contract farming company has actually paid the premium themselves on behalf of the farmers. But this has not been a premium subsidy per se, because the farmers have repaid the premium at the end of the season. Yeah, so it's essentially the contract farming company has pre-financed the premium on the farmer's behalf at the start of the season. So the reason they've done this is, firstly, they have a direct insurable interest in, the crop being produced, for example. Secondly, they have a credit exposure because a lot of times they're giving the inputs on credit. And then thirdly, they've also used this kind of insurance product as a kind of incentive for loyalty-based contract farming. So for incentive-based contract farming, this kind of approach has been used. So to give a quick example of this in the context of cotton outgrower schemes in Zambia, so this is actually one of the longest, in fact, the longest running agriculture inclusive insurance product in Zambia. It's been going on since 2013 now. And the product has been, it's essentially a weather index product. It's also been combined sometimes with funeral microinsurance as well. The crop being covered here has been cotton. And basically the weather-related risks like dry spells and excessive rainfall have been covered. The premium has been fairly low at about 30 kwacha, which is the combined for weather index and funeral combined. But one of the reasons for the low premium has been that the sum insured is also on the low side. It's 250 kwacha for weather index and 1,000 kwacha for funeral. So there's actually also a provision for farmers to buy multiple units of the insurance cover if they want. So a farmer could buy, if they want additional coverage, they could buy additional units of the same insurance coverage. With this model, we have seen over the last 7 years now, about 120,000 farmers have actually been insured cumulatively. In some years, this has happened at a portfolio level where the contract farming company has applied this across their entire portfolio. But in other years, indeed, the longest running schemes are those which have been voluntary, where farmers have actually been buying the product on a voluntary basis. Some of the interesting results we have seen here is, apart from the insurance livelihood protection side of things, we also see that this kind of model can lead to potentially higher levels of loan recovery and deliveries, potentially lower side selling as well. So this is a very interesting model that is, that's been going on in Zambia for quite a few years. Another model is, linking it to farming inputs. So in this model, basically, when farming inputs like, say, seeds or fertilizers are given to farmers, you can have insurance packaged with the farming inputs. So in this case, it depends. Either the insurance could be covering the inputs being given on credit. So it could be a form of credit insurance for the inputs being given on credit. Or it could be also linked to inputs which the farmers are buying for cash, in which case the benefits could be paid in cash as well. Or it could be paid through vouchers or discounts. So this kind of model has, this is also something that has been trialed out recently by Good Nature Agro. This was tried out some time ago by Pioneer Seed as well. And in these cases, basically the insurance is used as a kind of marketing tool to basically make the inputs, more attractive because they come packaged with the insurance product as well, or there's an option of buying the insurance product from the input supplier. So in this model, some of the impacts we've seen is that it can actually help in terms of course, there's the livelihood protection for farmers. It can also make it easier for farmers to access farming inputs, for example, in the bad years. It can also make it easier for farmers to, if they can access the inputs quickly, to replant and try again. And of course, there are other value-added services which they could also access. So especially if mobile technology could be used, such as weather advisories or crop advisories. For the agribusiness, this kind of integration with inputs can help in reducing defaults or reducing the credit risk. It could be used as a marketing tool for the inputs themselves. It could also help in better client loyalty and retention, opportunity of having higher sales at the start and during the season as well, if let's say if the payouts are being given through vouchers or discounts for additional farming inputs. And all in all, it can help in improving the relationship as well with farmers and other stakeholders. Maybe just another, or maybe just to skip this one in the interest of time. So another very interesting model has been linking insurance with loans, as Joseph was mentioning earlier. So to give a few quick case studies of this particular model, we've had, as was being mentioned earlier, in some other countries like in Rwanda, we saw cases where banks, commercial banks in particular, actually stopped giving out loans because of the high flood risk in Rwanda. But then because of the presence of an index insurance product, they agreed to give out loans again. Actually, a similar phenomenon we've also seen in Zambia previously with MFIs like Agora Microfinance and so on, where they had actually stopped some of the seasonal crop loan products previously because of the high risk involved. But then because of the inclusion of the weather index product, they were able to re-enter that market and give out specific crop loan products for seasonal crop production. It could also work the other way around, and so maybe the example from in the context of Zambia is interesting there, where ZNFU in the past, they used to use insurance as a form of soft collateral in a way, or an alternative to collateral in order to access loans from banks like Zanaco and others. So it could be, so essentially this role of insurance as a way of reducing the credit risk makes it easier for both for financial institutions to give loans in the first place, and also for farming organizations to to access these loans as well. Yeah. So in doing that, the financial institutions actually end up playing a number of different roles. For the actual distribution of the insurance product, bundling of insurance with credit, supplying data for the actual underwriting and design of the product, and also very crucially, potentially pre-financing the premium. So potentially paying the premium on the farmer's behalf is one of the key success factors of these types of products. Okay, then moving on to the last, just a few other options on how insurance can be linked with agriculture finance in addition to what we talked about. So there are some cases where agriculture insurance is also being distributed by banks and microfinance institutions in particular on a standalone basis, so on an agency or commission-based model. This is not a very viable option given that take-up rates is low for these types of products on a purely standalone basis, and the risks can be quite high as well. But there are some cases we've seen also in other countries, including in Asia, where this kind of approach is being done. Agriculture insurance could also be used as a form of soft collateral or an alternative to collateral for farmer organizations. So we saw this in Zambia some years ago, where one of the district farmer associations, I believe this was in Mumbwa, actually used the insurance product as a form of guarantee in order to access fertilizers on credit from Omnia. In some countries, agriculture insurance could also be used, has been used as an incentive tool to encourage farmers to take up new types of technology. So for example, in Bangladesh, they used insurance as a form of incentive to farmers to actually use the electronic wallet for accessing farming inputs on credit, which farmers were more reluctant to do to start off with. And of course, having these types of insurance products also reduces risk overall for specific niche loan categories, such as, let's say, livestock loans or seasonal crop production loans, which also makes it easier for banks and MFIs to develop these products in the first place, which is again something that we have seen in the context of Zambia as well. Okay, so those are some of the examples of integration of insurance with agriculture financing. So in all of this, I guess one theme that is emerging, be it whether it's banks or MFIs or input suppliers or agribusinesses, is that there's many different potential roles of aggregators in all of this. So for these value chain stakeholders, these are some of the different roles that they might be playing or they might have to play. Of course, a big caveat on this, I would say, is, don't be scared by that list of potential roles. It doesn't mean that, say, a bank or an agribusiness would have to play all of these roles at the same time. They might just play one or two of these roles. But these are some of the potential areas. So to do with the distribution of the product, potentially financing the premium or collecting the premium, advising on the product structure itself on behalf of the farmers, or even on the pricing on behalf of the farmers, in the awareness raising and facilitating the insurers' marketing of the product, and other operational areas as well. But like I say, that it doesn't mean that an aggregator would have to do all of these things, but these are some of the different roles that they might have to play. Now, obviously, we all appreciate that, we know that the agriculture business, agriculture value chains are very risky and volatile sectors anyway. So it's not reasonable to expect an aggregator to play all of these roles for no good reason. So there has to be a very strong business case for the aggregators to actually consider doing any of these roles. And these are some of the potential business cases or potential beneficial impacts that we've seen over the years for the value chain stakeholders. So when it comes to banks and other financial institutions, these types of insurance products can reduce the credit risk overall. It can actually lead to more loans being disbursed because of the reduced credit risk. It can also help in a better client relationship, more of a risk-based business strategy as well. Overall, it can also help in reducing the portfolio risk for the financial institution. It can also enable the financial institution to give out specific loan products to farmers, for example, to rain-dependent farmers, which are most small-scale farmers in Zambia, or even to enable loans to be given out for specific crops or in riskier areas because of the insurance coverage. Also, it could, interestingly, it could also help with this concept of giving out emergency loans. This could also become easier for financial institutions to do if they have an insurance product, for example, at a portfolio level. So if there's a major flood in, say, Katete, they could potentially restructure the loans which are there or give out emergency disaster loans, which are being partly financed by the portfolio level insurance product. So in other words, insurance could be used as a form of disaster risk financing by the financial institutions as well. When it comes to agribusinesses, there are, again, quite a few different potential benefits, such as reducing the credit risk, using insurance for as a kind of marketing tool for their inputs, to improve client loyalty as well, potentially to reduce side selling as well, especially in the context of contract farming. So that's basically some of the potential business impacts. Again, we wouldn't want to say that all of these things would happen at the same time, but these are some of the potential business impacts. But even if one or two of these beneficial things happen to the value chain stakeholders, then it could certainly be worth considering having agriculture insurance integrated with your other services. So maybe I'll leave that exercise for now. But essentially, just to conclude, if I mean, maybe as a kind of a practical perspective, if you are interested in having these tailor-made products, then essentially from a data perspective, it's there's really not a huge amount of data that's needed from an essential data perspective. It's really about knowing where the farmers are located. Of course, if it is integrated with the ILRG project, then there's a huge advantage there because the GPS coordinates are already available at a very granular level at the farmer, at the household level. But otherwise, knowing where the farmers are located or reference points of where the farmers are located is good enough. Even knowing the agriculture camps of the farmers can be useful. Knowing about the crop cycle, what are the planting dates, those are pretty much the essential data points. Then the rest of the data is good to have, but not essential. And that can lead to, that can help with starting the process of developing these insurance products. So I think I would like to end on that. Yes, if you have any questions or comments, maybe handing back to Matt. Yeah.
Great, thank you so much, Agritosh. Yeah, please, we will, of course, share all of the presentations that have been placed here. I really do wish we could have been in person to discuss these and really engage in an easier, more fluid way. But yeah, are there any questions that have emerged or insights? Feel free to take yourself off of mute. What this has really brought to my mind is that question of who is the one who's putting insurance onto the activity? Is it the input company or is it the farmers themselves? And this bundling piece seems to mean that many cases the farmers won't even know that they're insured, and it's really the company that's doing the insurance side of things, because they are fairly complex. But yeah, are there any questions that have emerged out of these various discussions? I also wonder, many of you are coming from a banking perspective. I see we have Patrick Masole, the head of Land Alliance in Lusaka, online, who's more coming from the land perspective. I wonder whether Patrick or Adam, maybe Adam from Chipata may wish to reflect a bit as the land Chipata District Land Alliance partner on this work. I don't mean to put you on the spot, Adam, but I wonder what you've seen and have thought from this work. Or even, I believe, a few moments ago, we had Patauke District Land Alliance on.
Yeah, thanks, Matt. I think for me, it's a lot of information and learning. So maybe if my colleagues in Chipata have a comment, otherwise it's a lot of information that we are learning as a land-focused NGO. Thank you.
Thanks, Patrick. Yeah, indeed, the value of land does not come from just having a documentation or being secure, but it is about what you do with that land. And I think as Makupa had noted, at the end of a farming season, a farmer may be holding on to 100,000 kwacha, and in managing those funds in a variety of ways, managing their debts. So banking should be a secure way to manage finances throughout the year. And of course, so much of a population is unbanked, and those risks really fall on the individuals each year. Great. I wonder too, from, we have some other banking partners here. I know we have Indo-Zambia, we have Mayfair. I'd welcome any of sort of your thoughts or questions whether your activities to reach outside of the district, outside of municipalities, outside of even the peri-urban formal farmers, whether this resonates at all. Here we go, Adam. Thanks. Come on in from the Chipata side.
Yes, yeah, thanks, Max. I think, I think to both presenters, I think the microfinance and also the crop shield, I think for us as partners, as implementing partners, I think for the IRG, TGCC, and what we see as an opportunity is to explore more on how we can create the linkages between the documentation and to the service delivery. I recall in the presentation from Madison, where there's some of the challenges in some areas where some certificates have not been distributed. I think it calls for working together as partners to explore more on how best these services can be delivered. Again, I think for crop shield, in areas where we are working from, some insurance systems or rather packages are relatively new in terms of community people to understand the benefits and what. So I think it also calls for continued working together to make people understand exactly what this is all about, because it comes with a lot of maybe fears by the communities that what happens if we default, understanding that insurance companies are profit making in some way, like some communities understand. So what happens if we default or what? So I think all this calls for partnership, working together and explore more opportunities on how we can have these services delivered. Thanks.
Yeah, thanks for that, Adam. One of the interesting pieces that's emerged from my understanding over the past year plus has been which insurances people are most interested in what areas micro saving and micro insurance can help with. And two of the big ones that I think both MFinance and Risk Shield reflected on are funeral insurance, as that represents a huge cost to families, as well as health savings and micro health insurance. I think we all know the demands that come upon households during these seasons, and knowing that you have something reserved for that specific occasion that can be a hardship is a good way, so that people aren't saving funds for something abstract. I don't know whether MFinance or Agritosh would like to reflect on that, but before we come there, we do have Changwei has a point to raise. Thanks for raising the hand. I can unmute you there. Great. Changwei, did you want to come in?
Yes, and thanks for this opportunity again. I'm coming from the perspective of, of being like an input supplier, right? Because like Good Nature Agro, we do provide the inputs, to our farmers, at a large extent on credit. So the challenge that we have, as a seed company, is we want our farmers to have funeral insurance, and we want our farmers to have weather-based insurance. And we've had excellent, conversations with Risk Shield and Agritosh and team. But what we found is there's a disconnect, and this is where I'd like, the bankers to kind of pay attention on maybe ways in which we could come together and brainstorm around this, and the financiers. So if you put yourself in our shoes, right? We are the input supplier. We want to embed the price of funeral insurance and the price of weather-based insurance for our farmers, because those are the two I think that are most relevant for our business, at least, and for areas where we can see, like finances, see interest and, like think of ways to come in. Now, the problem that comes in is the company that has to bear the financial like burden is actually the input supplier, because as the aggregator of input of putting the insurance embedded in our cost of input, and we give it out on loan, we still have a liability that we're exposed to, over a period of 180 days, but we still need to make payments to Risk Shield, for those insurance. And we also have to bear the other risk of possibly at the end of season not being paid back, like from the farmers, because sometimes they side sell, sometimes, like things just don't work out. Granted that we have a really good, like about 92-93%, like repayment, like average, which is really good. But I would more want to present this challenge as in, how do we find a way to work together? Because when we pilot and say, hey, this is the price of the inputs and here's the extra price of the insurance, we get a lot of pushback from the farmers. And insurance is not a very, especially weather-based insurance, it's a very difficult thing to explain to farmers. I've attended these sessions many times, and some people get it, some people don't. So we end up using peer-to-peer, to present, and it helps, but they feel like they're paying for something. So the only solution is to really embed it as an input supplier. But again, the problem with embedding it again is we end up with a liability exposed over a period of 180 days. And I would more want to hear from the finance, the banks and, like the microfinance. How do we partner so that the burden isn't just on one person and we can spread the risk? I hope you've understood, like where I'm coming from.
Thanks. Yeah, very much so. Thanks so much, Chongwei. Let's open that up to Agritosh and MFinance. I will also just note one more time, because I know some people will be dropping off. I really appreciate you spending this time with us. We don't have a lunch buffet waiting for you all, unfortunately, today. So I am going to thank folks and allow people to stick on and ask a few more questions for the next 10-15 minutes. I will also remind you, as I've put in the email chat, if you would like a bundle reimbursement for your time today, please do send an email with your name, email address, and phone number where we can send a small bundle to. Send that to me, and I'll put my my contacts in the chat one more time again. But yeah, let's hear from either, well, maybe first MFinance, how to deal with this issue of, or either Agritosh or MFinance, on the risks that are being borne inevitably by the input supplier, and how to help them with that. Oh, Kandwani's on. Come on, Kandwani. Thanks. Appreciate it.
Hello.
Yep, you're good.
Okay. In the first place, if we disburse loans based on the inputs that have been supplied, what we need to know is that in Zambia, by law, all loans that are disbursed have to be insured. So the loan comes with its own insurance. That as we disburse the loan, those loans are insured. So once we insure those loans, even if that insurance is against death. So if a client dies, then the insurance company will pay for that particular loan. Then in terms now maybe of harvest and side sales, that's where now we need to explore the issues to do with the weather and other insurances. But in terms of death, I think that it's covered. Thank you.
Yeah, maybe just to add to that, and also responding to to Changu's question. I think that's a great question. I think it's one of the challenges really, because I fully see where you're coming from. That basically, if say as input supplier or any other agribusiness as well is bearing this cost, then you're also exposing yourself to a higher risk of, in the event of side selling, if you're pre-financing that premium, you may not be able to recover that premium at the end of the season because of side selling or default from the farmers as well. And that is a challenge. I think there, in terms of just as as an example, we had actually looked at this, in a contract farming arrangement. So we've been working with various contract farming companies over the years. So I remember some years ago, at one point, the contract farming company had the same kind of request, like exactly what you've just asked right now. So we looked around in the market and we actually approached some of the MFIs and banks in the market on, what would be involved if they are, so essentially if they are financing the premium. And one challenge with that was, from what I remember, that let's say if the cost was, say, 30 kwacha as a premium, if it was added to the credit, the effective cost would become like 50 kwacha, given the rates of interest being used and so on. Yeah. So, so in other words, the interest that is being charged on the premium itself makes the premium more expensive. Of course, we understand why that interest has to be applied, because obviously the credit risks are quite high and so on. But I think that was one of the limiting factors. So actually, in that case, the contract farming company actually decided to finance the premium themselves without asking for additional financing from the bank, because it would make the premium that the farmer has to repay almost double or increase by 50% or something. So yeah, but then I certainly think that's something which can be addressed. I mean, one of the ways of doing that could be to basically look at also for the banking sector, to look at insurance not as an added cost per se of lending, but as an additional product that they're financing. So in other words, sometimes the cost of insurance is perceived as an additional interest rate on top of the loan, but in fact it is an additional cost of accessing the credit, but it's also an additional product with its benefits and so on. So I think that's something which can also be looked at from the banking side. Yeah, I don't know, Joseph, if you want to add to that as well. Yeah.
Yeah, I remember that when we had that discussion, there was also some suggestion that came that what if so at the point of farmers selling their crops to the outgrower scheme, how about if the farmers can post-pay the premium, so kind of deduct in advance the insurance premium for the coming season? But of course, that has its own challenges as well, because number one, of course, you don't know whether that farmer will be coming back to participate in the same scheme the coming season. But of course, just one suggestion that came, that if possible, at the point of farmers selling their produce, you can deduct the cost of insurance for the following season.
Yeah, maybe just to add on that, one of the things, I mean, maybe also referring back to what Matt was saying earlier, I think it's from a cost perspective, obviously products like funeral are much, much cheaper, because the risk of someone dying is like maybe 1 in 1,000, roughly speaking. But, compared to the risk of a drought happening is like 1 in 3 or 1 in 5. So obviously you'd have a much more, a cheaper product for funeral covers and so on. But one of the issues we've seen is, from the farmer's perspective, generally when you ask farmers about their product preferences, usually they are less interested on products like funeral cover, even health. Interestingly, I mean, maybe it'll be good to compare with MFinance on this, but generally farmers are not that keen on having a health insurance product per se, because, I mean, it depends on what the product is covering, but if it is only covering, let's say, hospitalizations and so on, then it's not really that relevant for the, the typical small-scale farmer who never has access to hospitals or very rarely accesses hospitals. So in other words, I think the main products which people are quite interested in are actually to do with agricultural risks. But then the challenge is around, one of the challenges comes down to when the premium needs to be paid. So if it needs to be paid at the start of the season, which is typically the requirement from a insurance perspective, that makes it difficult. But so I think one of the way that, as Joseph was mentioning, if the premium could be paid from the proceeds of the harvest of the previous season, that could be one of the way of, of addressing that issue of the premium payment. Thanks.
No, that's very interesting, and of course, a lot of what we're talking about here is the relationship between farmers and the input supplying company or the service provider, and so that end of season payment and potential access to other products over the rest of the year does potentially solidify that relationship for the coming year, which is something we see, through a lot of the financial services, particularly in the U.S. in the West, where we're establishing long-term contracts, not doing monthly payments, but doing things for the whole year, and you get a slightly better rate once you commit earlier. So this is super interesting. It is certainly not our expertise in the ILRG program. It has been really useful working with both MFinance and Risk Shield. We are hoping to be able to do a little bit of additional work next year in the coming season, potentially in a few other chiefdoms where ILRG has been working. So stay tuned to that. I think the other piece folks should be aware of is that there is a recent USAID program that has started called EDGE. They are focused on advancing smallholder or agricultural access to financial services and many of these technologies. So I'm hopeful that they'll be able to pick up some of the technical slack and the lessons from this activity and build on them. We are 10 minutes over. I'll invite anyone else to lend their voice if there's anyone who would like to come off of mute and ask a final question or provide a final reflection. I'm grateful for your participation. There's 30 people here, 35 who attended overall. We will send out the outcomes of this meeting within a week. If you haven't heard, you feel free to contact any of us here. We do look forward to continuing this discussion and helping to ensure that land documents and people's physical address and knowledge of where people live, how much land they have access to, has to be useful for Zambia's future agricultural productivity, and these benefits have to arrive back at the community. Any final reflections? MFinance or Agritosh, anything you see for the future, future partnerships, future work before we close up?
Okay, yeah, so, well, yeah, sorry, go ahead.
Yeah,
Go ahead.
okay, you can go ahead, it's fine. Yeah.
Let's start with Makupa and then come back to Risk Shield. Thanks, Makupa.
Okay, thanks. I think from our side, as we are doing the works in Chipangari district, there have been certain clients who are recommending to do similar works because they know some of their relatives, they were admired in the works that side and they were staying in other chiefdoms. So which they would recommend that, no, even my brother there needs the services. Like for instance, as we go to side in somewhere in Chief Makuya, somewhere there are certain, before you reach Chief Makuya, there are certain people needed our services. So when we heard of doing the extension in other areas of concern, I think it's a welcome move, and we are ready for that. I think that's what I can do. And then also on the part of Risk Shield, yeah, I think Joseph also mentioned on the issue of communication, like convincing farmers. I think I feel like more publication, like brochures, which can also be used as a model of selling out ideas and the market. So at least the explanation is simplified, so that farmers can grasp the whole essence of index insurance. I think with that, I think it will help. I think I can just end by saying thank you for your time and everyone who participated. I really appreciate, and everything went well, and I've been educated, actually I taught in one or the other from the Risk Shield. And then I think from our side, what we should do, also put in mind, especially with the risk index insurance, is on the farmer side, how much it's going to cost on their part. Yeah, I think that's most important, because if it's too much, then it will take time for them to be part of that. Thank you very much.
Thanks, Makupa. Yeah, cost is everything, and particularly these days and the changing foreign exchange values and world commodity prices, it's hard to predict. And of course, the farmers tend to feel the negative impacts of overabundance in terms of the price they get. And of course, when there's climate shocks, they tend to feel the pressures. I did see Douglas's hand come up. Happy to bring you in if you have a quick point. Is it Douglas?
Yes, thank you.
Yeah.
Just wanted to say thank you to the presenters and thank you for inviting us through. I think there was one person who raised an issue of how can the insurance product be simplified for probably the smallholders to kind of grasp the concepts and everything. From our part as GIZ, we work with Risk Shield from time immemorial. We've been working with them, and we've actually developed quite a number of training materials, which we're using to create awareness among the smallholder farmers. And all these training materials have actually been translated in local languages. That's Nyanja, Bemba, and Tonga. So, I mean, like we said, we need to work together. So I think we can still reach out to each other and see on how we can work with each other. We can do the support in terms of awareness creation. Yeah, that's what I thought I could share with the team here. Thank you.
Thanks so much, Douglas. It's a really good point. Many times as projects and programs, we start with these activities to say, develop materials, do this, that, and we fail to realize or remember that very good materials have been developed right on the side by a neighboring program and a neighboring chiefdom or what. So I appreciate that reflection. Risk Shield, final words, and then we'll close up.
I think just to say that, one of the points around, the awareness raising and the farmers' understanding of the products and so on is also to do with the past experiences of payouts, of claims being paid out in an efficient way and so on. And I think this is something actually where, if you, in the context of the ILRG project in Eastern Province, I think it's actually been more challenging than, let's say, other parts, like, for example, the Southern Province. The reason being that the weather patterns have also been such, like, in the South, there are more occurrences of droughts and dry conditions, relatively speaking. So there have been more payouts which have happened there in the past, which is a little bit different now to the Eastern Province. So I think all of that to say that it'll be interesting to look at maybe also ways in which the product could be, like, I know with some of the risks which are there, like flooding and so on, it might need a different approach to what is done currently for the index products. So that could be something which can be looked at. But apart from that, I would certainly encourage the participants also from different financial institutions and agribusinesses to have a reflection afterwards about if there are if they see a value add to their businesses as well, of basically integrating insurance with finance and inputs. I think at the end of the day, that's also a key success factor for these programs for the farmers if the value chain stakeholders see it of being value to themselves as well. Yeah, thank you.
Yeah, of course, and that's really it. Is experience is everything. It's one thing to come to a webinar and be convinced that a product is worthwhile, but oftentimes until you see your neighbor benefiting or someone else benefiting, or you're not going to make that flip. And so it does take a number of seasons. I think we've seen that certainly with the MFinance work. So it is a process, but even just like land documentation, a lot of distrust at the beginning, but once you see that your neighbor has it, it can result in a big jump in interest, and we need to be ready for that. And as you say, efficient payouts is everything. So much distrust of our ability. Many of our organizations are, trying new tools for the first time, and we have to be able to deliver. So thank you all. Really appreciate your interest in this topic. Do continue the discussion. If things go well, and COVID and health depending, I hope that we can bring people together around for another season of discussion. Those of you from financial institutions who may not have participated in this last round, do continue to be in touch because we hope to be able to help extend services to the partner chiefdoms where we and others work. So, thanks much, and have a great rest of your day, and be safe. Thanks all.
Thank you. Bye-bye.
All right. Thanks. Bye.
Joseph, Alston, Emmanuel Tembo. I wish we would have heard from you from the titling program. Esther, Faith, Katungo. Kandwani, thanks for your inputs. Leah, Mavis, and Sama. Patricia, thanks for the inputs in writing. Ruben, Ruchea. Russell will follow up on the bundles in a few minutes.
Sure.
Thanks, Techno and Sefu. Douglas, thanks for those inputs at the end. I appreciate that push from GIZ. Oh, and many of you all can also participate in tomorrow's ILRG webinar on women's land rights as well. So I'm sure Patricia will appreciate having more participants.